Hello, everyone, and welcome to Breckcast, Breckland Council's podcast, our new way of reaching our residents, our business community, and our valued partners. Throughout our podcast series, we will be exploring the work of the Council, lifting the lid on how we deliver the services you rely upon, discussing that delivery with our partner organisations across the district and further afield, and exploring the issues that matter to you. I'm Stephen McCarthy from the Breckland Communications team. Today we are talking about Breckland's property portfolio, or more precisely, how Breckland uses property investments to pay for council services. I'm joined by Breckland's Executive Member for Property Projects and Procurement, Councillor Paul Hewitt. So Paul, let's get right to the heart of it. Why is Breckland Council in the business of buying and renting out commercial property? Is that something for us, or is that something we normally associate with the private sector?
And thank you, Stephen, for getting right to the heart of it right at the very start. And let's be clear, we're not in the business of buying and renting out commercial property. We're in the business of allowing our businesses and our residents to thrive. And we can do that through the work we do in the environment, through grants, through services, through housing, all of which need money. And we are in the business of buying and renting out commercial property in part to raise that money. You ask, isn't that something that only the private sector can do? And I would say it's something that the private sector does and does well, but there is no reason why we can't join in the private sector and actually be a responsible landlord with all of the issues that involves, and in turn ensure that our businesses and our residents can thrive through the income that we generate through buying and renting out commercial property.
So you've mentioned the services that we provide, and you've mentioned that commercial property is one of the ways of funding that. To the average resident, it might sound strange that their council tax doesn't cover everything. Why can't traditional government funding meet the costs of public services anymore?
I think that's probably a question you want to ask governments for the last 50 years. There is always going to be a shortage of money to provide the things that we would like to provide. I sit on a parish council as well. We have exactly the same problem. We don't raise enough money to do what we want to do locally for the parish council. At district level, we can't raise enough money to do what we would like to do as a district. I'm sure at government level, this is exactly the same problem. There is more need than there is money to provide for that need. I think the only difference with central government is that there are more noughts on the need. We have been challenged for a number of years. I don't think there was ever a time in Breckland's history where we had enough money to do everything that we wanted to do. And that means that we either need to make a choice of not doing things, or we need to be a bit more savvy about raising the money that we do need in order to do those things.
You've mentioned there, Paul, about central government funding services, and particularly long-term funding. One of the ways that we associate central government funding those major projects would be borrowing. In terms of Breckland Council's attitude to borrowing, what can you say on that?
You are right. Central government does borrow, and it borrows a massive amount of money. It can do, and it raises that money in the bond markets. And we might have a think about those kind of later on. We're proud as a district that we have never formally borrowed money. Some councils do. Norfolk County Council borrows money. Some of our neighbouring district councils borrow money. We've always tried to cut our cloth to suit the budget that we have. I'm one of those people that says, actually, there may be a time in the future, or there may be a time in the past where maybe we should have borrowed, but we chose not to. And I'm proud of the fact that we have chosen not to borrow. Some of those councils that have borrowed have got into real difficulties about the borrowings that they've taken on, particularly when they're investing in non-core services. And we might have a chat about those things later on. We've chosen not to. And I think it's something that we are proud to have decided not to do. If you're asking me in another voice, was that a sensible thing to do? I mean, I don't know. I can't rewrite the past. I think we might have missed some investment opportunities in the past. where we would have had to borrow to do that. But we are where we are. Governments can borrow, other councils can borrow. Breckland is proud of the fact that we have no external borrowings at all that funds the services that we provide in order to allow our businesses and our residents to thrive.
So we've talked about funding for services. In terms of the portfolio itself as a source of that funding, what can we say about Breckland's property portfolio? How extensive is it?
On the one hand, it is actually quite extensive. We own about 85 million pounds worth of property assets, which generates in turn some three and a half, just under 3.5 million of rental income that allows us to provide the services that we choose to provide. Those assets are spread all over the district. We invest in offices, we invest in car parks, we invest in community centres. We've got some museums on our books. We've got some industrial units. We've got some leisure facilities and some land and other infrastructure assets in there as well. Some of those assets are quite big, really quite big in terms of lands or buildings. And some of them actually are just down to a few square feet of land that we've picked up over the last 30, 40 years, which really we don't want to hold, but we do. And we always find ways of trying to return that type of small asset back to the community where we can. But yeah, the assets are all over the place. You might be walking in a town and you might think that's a nice bit of grassed area. Does it belong to the town? And it might belong to the town. It might belong to a private landlord, or it might actually belong to Breckland itself.
I think some listeners will have picked up on the fact that you mentioned car parks, and we know that was a very important issue recently. Don't worry, there is a question later on. We're going to get back to that. In terms of the value and how it stacks up against the other income streams, how much of the council's budget is sourced from those investments when compared to council tax and business rate income, for example?
You raise a really good question, and this is where things will suddenly get quite confusing. And I don't want things to be confusing. On the one hand, Breckland spends about 60 million pounds a year providing services and facilities and income to our residents and our businesses, and we take in about 60 million pounds a year. But a big chunk of that money that we spend comes from central government. So if we think in terms of Breckland, the council tax that all of Breckland council taxpayers pay raises about 3 million pounds a year. The business rate's a little bit higher than that. And so in that context, thinking about the income that we generate from our property, that is about a little bit more than the amount of income that we raise from residents on their council tax bill. Now, be clear, when a resident receives a council tax bill, it will have Breckland's name on it, but 80-90% of that council tax bill will go to the county, to the police and crime commissioner, and perhaps to their parish. We just take, from a typical bandy property, about 120, 125 pounds of that council tax bill. The rest goes elsewhere. We collect it on behalf of everyone else, but you could say that's our income. And if we add up all of the different council tax rates just for Breckland, it comes to about 3 million or so pounds from residents.
I think that is statistic that will probably surprise a lot of residents, that the district element of their council tax collectively adds up to less than the income that we actually make as a council from our commercial property portfolio. Commercial property in general is risky. Do councils have to take that risk? And how does Breckland manage or mitigate those risks?
And I think that's the real root of the challenges we often face as a council that invests in commercial property. Do we have to take the risk? No, we don't. We could take this 80 odd million, take out the money that we've got for the small bits of land and the offices that we ourselves rent and various other stuff, and we could just put that into a bank. And you will know, and I know, that the returns that we get from banks, even with interest rates as high as they are right now at just over 4%, the returns we've had from banks over the last 20 years have been basically 1% at best. Property will allow us to generate more of a return. But as anyone who's ever made an investment in the past will know, in order to get a better return, you are taking on more risk, that risk-return relationship, which always has. But I also want to be clear about something else. People often misunderstand the word risk. Risk as an investor means that I don't know for certain what the outcome in the future might be. I can plan for eventualities, and our teams will spend a lot of time to try and work out, if we do invest in a property, what the income might be, what some of the cost of management might be, what some of the challenges might be, and we will manage those risks down. But by definition, if you are investing in property, you are taking on a higher risk than if you were to put money in the bank. But the corollary for that is, if you were to be putting money in the bank, we would not be making £3.3 million worth of returns on property. We'd probably be making £500,000, in which case, I guess your next question might well be, well, if we didn't invest in property, where would we make up the shortfall from our property returns? And the blunt answer is quite straightforward. We either don't do some of the things that we choose to do, or we will put council tax up in order to keep doing the things that we choose to do. And for us as a district, and certainly for me personally, I think it's better to take a small considered commercial risk in order to allow our businesses and our residents to thrive than to charge our residents a higher council tax just to get the same services that they have at the moment.
You've talked all about putting the money in the bank and earning interest on that and low interest rates over the last 10, 20 years. In terms of an investment, do you want to talk a bit about capital and cash flow, capital and revenue? Because I think that's one of those things where the average person, when they start to talk about local government finance, that's kind of the point where they switch off because it suddenly becomes hidden behind jargon.
There is a lot of jargon, but let's try to explain it in a way that hopefully will make sense to a lot of people. Breckland Council, we spend money and we receive money. I mentioned that earlier on. We receive grants in from government, we receive council tax in, and we spend money out, some of which we get from central government and some of which we don't. And the money that we receive and we spend is, we can refer to as revenue, income, revenue expenditure. Breckland also owns stuff, and we own buildings, and we own a lot of other land and various other bits and pieces. We also own some investments, some bonds, and various other things. And we own some cash and stuff like that. And we can refer to that as capital as opposed to revenue. And here's the real challenge. Government rules and legal rules around capital and revenue are very precise and very separate. You can't use capital to provide a revenue service. We need revenue to provide a revenue service. And the other thing is, you can't erode capital down. We have to hold certain levels of capital. We can't invest in certain things with our capital. Over the last couple of years, I've seen the cost of shares going up quite a lot. The equity markets are doing well. Councils can't invest in equities. We're not allowed to. All we can do is invest in bonds, or we can invest in land. Those are the only two assets, realistically, that councils can invest in. At the same time, we need revenue to get the income that we need to pay the service charges and the grants and the various other things that our residents want. So the skill, I think, from an asset manager's perspective, and in this instance, I'm not the asset manager, it's the team that are doing this, are to take capital sums with all of the restrictions that those sums involve about what you can and cannot invest in, and turn that into revenue. And with the revenue, we can spend the income for the services that our residents tell us that they want and they need. Councils need to distinguish between capital and revenue budgets. We spend revenue, and the only way we can raise that revenue is by getting income to cover that revenue. We need to protect capital, and the way we protect capital is to invest in certain assets. And then, as you rightly say, the skill is to try and get the assets that we invest in, like land, to produce the revenue that we need in order to pay the services that our residents really do value and trust.
So going back almost to the first question, in many ways, our commercial property portfolio is a way of us converting capital into revenue so that we can spend it on services.
You are absolutely right. And it's part of our asset management strategy, which we took through the whole of council last time. So the whole of council supports this. We will invest in assets to the extent to which they can produce revenue. And the revenue that we produce from those assets will allow us to provide the services that our residents need. And without that, going back to your earlier question, there simply isn't enough income coming into the council to provide all of the services that our residents need.
So there are two follow-up questions to that look at it from both sides. In terms of the income that we receive and it funding services, can you give some examples of where people will directly see the impact of the income from our property portfolio in the services in their community? And then the one after that, if we didn't have that income, what would be the impact that people would see in their community in terms of loss of services or things that Breckland couldn't do?
I think some of the things that we do, I mean, some of the services that we provide as a council, people can see all of the time, emptying bins. And I could provide that as a statutory service in many ways, although it's not quite earmarked. A lot of the council tax that you provide will cover some of those statutory services that we have to provide as a district council. Some funding for some of those other statutory services come from central government. And we provide those services through some of our partner organizations like ARP in terms of benefits and revs and bends and various other things that we do. When we start going a bit deeper, when we look at our Inspiring Communities work, when we are investing in communities and communities groups, when we're making decisions that allow not just the receipt of a benefit to a resident, but actually enhancing that resident's life, that's where the non-statutory impact of money raised through our commercial property portfolio will help. So every pound that we earn, we spend. And the type of investments we make, for instance, as I say, in our economic development side, trying to start up new businesses, in our Inspiring Community side, trying to help community groups who in turn can help their residents closer to the ground. That's where we see it. If you were to say, if we no longer produce that income, would residents see any deterioration in services? Well, at the moment, at least, we're not needing to make a decision that says, do we provide this service or do we cut our bin delivery times, or do we cut our bin emptying times, or do we charge more for our brand bins, or do we actually start charging more for some of the other services that we do? The answer is that it's a careful balancing act. If we stopped the 3.3 million that came from our investments, then perhaps that would happen. I don't know. I don't know the future, but we would need to start making some very difficult decisions about either we provide funding for a community group or we empty bins. Either we provide additional grant funding for some of our most vulnerable residents, or we have a planning service. Those are some of the real decisions that we need to make all of the time, because, going right back to a question earlier on, we simply do not get enough money from central government to do everything we would like to do.
One of the recent investments that people may be aware of, it's been in the press and it was announced at committee a few months back, was the purchase of the Peerless Plastics premises in Thetford. Why was that purchase a priority for the council?
I think for two, actually, not for two, probably for quite a few reasons. Let me just see in terms of where they all sit. And one is, remember earlier on, we were talking about capital and making sure that we can only use capital for capital things. And so we'd made some disposals and we needed to ensure that our capital base remained strong and resilient. At the same time, Peerless approached us, other agent indirectly approached us to say that there is an investment opportunity in the middle of Thetford, a thriving business that provides a fantastic job opportunity to the local community. That's got an established history, that will allow us, one, to invest in an employer in the town, continue, hopefully, the growth of that employer in the town or overall, but at the same time, from our investment, generate an 8% return on our capital. Which means that actually, no matter how you look at it, it seemed like a sensible investment. We carried out the due diligence. We investigated, the quality of the building, the business, the financial strength of area around that. And we took a decision after the due diligence and said this will be, one, a good investment fit for us. Two, it produces the yield that we need, generating the income that we want to provide services. And three, it provides a long-term investment and employment in one of our largest towns. And I think actually, you mentioned earlier on, is investment as a landlord just something the private sector can do? And I would say actually, as a local council, we are committed to the continuation of employment in our towns. We're committed to investing in our towns and our villages. And this felt to me and to the wider team a really, really sensible investment to do. Peerless ticked all the right boxes. It provided a yield. It provided a really good employment base. It provided an opportunity for us to invest within one of our major towns. And it provides income for our residents and hopefully our other businesses to thrive over the next 25 years, because that's how long the relationship is anticipated to last under the current lease term.
Your third reason there was touching on a question that we're going to get to in a moment, and that is around social return. First of all, before that, I want to touch on another major investment that people will be aware of over the last few years, particularly recently, because we have announced that we've sold Barnum Broom. Was it a successful asset, and what did the council learn from that investment over the years?
I guess your question was, it a successful asset? Was it a successful investment? Well, it depends on when you ask and who you ask. Now that we can look back with hindsight, we can say it was a successful investment. It generated income that we needed over the period of ownership. It generated a good yield. It generated a profit on the overall income and the expenditure. And it generated that income consistently year after year after year, that we could use then to provide services to our residents, to our other businesses. I think from memory, it generated over £6.5 million worth of return over our period of ownership. Was it a success investment? I'd like to have got more for it, obviously. But I think it worked because it met everything that we needed for it to do. It produced income. We didn't lose capital in any meaningful sense in terms of holding it. We got the same capital back essentially that we paid for it. And it provided a stable income stream for the council when cash rates and bond rates, that most of the noughties and early tens were near as, damn it, to zero. So it produced a good return overall. Would we make the same investment again? Well, to be honest, if the circumstances were identical, I probably would, because you would be a fool not to. It was a good investment. Would we invest in a single asset? That I would probably say no. I think the challenge with Barnum Broom was it was such a big chunk of our investment portfolio. It had something called concentration risk. And the concern with concentration risk is if you put all of your eggs in one basket, then you are really susceptible to what is happening to that one basket. I prefer to invest in lots of things. And we know that investing in property is risky, that some of our property assets will do very well and some might not do as well. But across a portfolio of lots of assets, we will generate the returns that we need in order to provide the income that we need in order to provide the services that we want to provide.
From a communications perspective, you've mentioned that Barnum Broom was an investment that attracted a lot of public attention. I think that you might have hit on something that many of our listeners will have noticed and perhaps not quite put their finger on, and that is As a public organisation, as a district council, we are very transparent and we're bound by legislation that governs how transparent we have to be for good reason. We work on behalf of our residents. When it comes to our stepping into the commercial world to buy property, however, things slightly change. There's commercial sensitivity, etc. And you've mentioned us not being able to say certain things around, for example, the sale of Barn and Broom. Is that something that you want to touch on in terms of elaborating the fact that that's, as a space for a district
Yeah.
council, our hands are tied in some ways?
And you hit a really, really good point, which is that I do some work with asset managers and some property investment managers in my day job. Um, and most of property investment management is a contract between a buyer and seller, and then it is a relationship between landlord and tenant. And those contracts are commercially sensitive and they're private, no matter how big the property portfolio is. When we're operating as a public sector investor, then we've got extra rules around transparency, and we are beholden to our taxpayers who say, "Why are you making that investment?" And that is a difficult balancing act. We have to publish our capital budgets year after year after year, saying here is what we intend to spend in the future. If you were to do that in the private sector, that's nuts. You're telling everybody your plans. You're telling everybody, say, in a few months' time, I will buy you at this. And as soon as we know that I'm going to buy something, well, as a rule, anyone who's selling it will sit hold of it for a bit longer and will ask for the price to go up in order to achieve the buy. We are limited. We are restricted.
So, Paul, you talked about the purchase of the Peerless Plastics premises in Thetford, and the third reason why we did that was because of something that we would call a social return. That it was protecting an employer in the town, protecting their future in the town, expansion of that business, potential expansion, potential future job growth, etc., as part of our overall aim to help our business community to thrive and to create better economic conditions for our residents. Has the council considered investments more along the lines of social return recently? And are there any examples that our residents will see, for example, in their community that are based around that social return ethos?
And the answer is to that. Yes, we do invest for social return. We sometimes will pass over some of the assets that we hold as a district to community groups. Every investment decision that we make, whether it would be for commercial returns or social return, is generating some type of return for our residents. Now, not all returns, I think, can be measured in purely financial terms. Some of the assets that we have built, for instance, quite recently in Thetford for temporary accommodation, don't generate a yield in cash terms, but they do provide a much needed service for the residents that we have who need, because they're vulnerable or because they're temporarily homeless, need those types of services. But we have to sometimes have a look at things in the round. Case in point, car parks. They provide, you could say, a social return because it allows residents and businesses to park in our towns for free. The challenge that we always have with providing a social return on our asset as opposed to an income return is we've got to balance the cost of providing that return, particularly if it's not a statutory service. Go back to what we're saying on. Some of the stuff, if you do is statutory, we have to provide, and some of the stuff is not. We have to provide temporary accommodation for those residents who present themselves as a council. By law, we have to provide that. And we don't get reimbursed for all of that money that we have to provide. That temporary accommodation, I think last year cost £2 million, and we'll recover as much as we can from central government. But a lot of this we have to find ourselves. And we have to find that through making decisions about, do we offer a service somewhere else, or do we cut that back and move money in terms of our temporary accommodation budget? Some of the income that we generate in our commercial property portfolio no doubt finds its way through providing accommodation for temporary homeless people. Car parks are an unusual one. For decades, we provided car parks for free, but they've never been free. Our council taxpayers are paying the best part of £8 to £10 on a Band D property to cover that £500,000 costs. It's a habit. I love parking for free when I go to Dereham or Thetford, even if my time is restricted, although I don't see that anywhere else where I drive. Or I move outside of Breckland, I go into Norwich, I'm paying £4, £5, £6 to park just for an hour to do my shopping there. So we've always got to weigh up the social return and the cost to everyone with the economic return from providing that service. And the conversation that we had with our communities a few years ago was, can we continue to provide car parking for free? And that the answer, no matter how hard you try, is no. If we provide car parking for free, something else has to give. It goes right back to the very first question. Why are we running commercial property? Because there isn't enough money in the pot to do everything that we'd like to do. We've avoided having that conversation for 20 years. Do we charge for car parking? How we affected that, though, was quite problematic. It goes back to the conversation about Barn and Boom earlier on, about PR. We firstly have to change car park orders to say it's possible to charge as a council. And that was when the first bit of news came about, and lots of people were saying, oh, Breckland are going to charge thousands of pounds of car parks. And I says, no, we changed the legal structure first. We then went to consultation to say, how do we want it to work? And the ambition all the time is, if you want car parks for free, something else has to give. If you want to pay 50p for parking for a couple of hours, then that doesn't have to give, because we can model this moving forwards. Other councils, they make a lot of revenue through car parks. We decided right from the outset, all we wanted to do is to cover our costs. So we set a charging strategy as low as we could to cover the costs of providing car parking. Why? Because we want to make sure that that £500,000 that we spend each year can go to those services that are needed by residents, not just to the provision of car parks. Yes, was it a difficult conversation? Absolutely. Was it the right thing to do? Of course it was. People value car parking, free car parking quite a lot. When they're asked a question, would you rather have free car parking, or would you rather bin service, or would you rather have an inspiring community service? Would you have a vulnerable person strategy? It's often quite clear where their decisions might well go. The question is, how to do it. The problem, of course, then is that we get overtaken by events. The whole point about charging for car parking is to maintain the ability to pay for our services in the future. If Breckland ceases to exist in the future, we no longer have an obligation to provide services in the future. So our work on car parking has to stall. Otherwise, we would be criticized for saying, why are you pushing ahead to do something that you and our residents will not see the benefit of moving forwards, because Breckland will cease to exist? So it's right to pause it. We've done all the research. We've got the data. We're currently in conversations with our towns that say, actually, the one thing that came out from the car parking consultation is that decisions around car parking should be town-led rather than district-led. And we respect that. And if towns want to take on our car parks at a small lease charge in order for the towns actually to provide the services that towns want, and ultimately it's a town decision, I think that's the right thing to do.
We've made it through to the last question, Paul, and I think this is a good opportunity to sum things up. When you're out and about in the district, shopping on a Saturday or Sunday, if a resident were to come up to you in the high street and say, why is my council acting like a landlord? What would your quick, succinct answer be?
And I think my quick answer would be, because you want us to. But not working as a landlord. You want us to operate as a responsible landlord. As a responsible landlord, we actually can provide the facilities, the buildings where employment takes place. That's beneficial to businesses and residents in the district. As a responsible landlord, we can invest in our communities. That is a benefit for our residents moving forward. And most importantly, as a responsible landlord, we can generate the yield that we need in order to provide the income that we want, to provide the services to our businesses and residents to allow them to thrive. That's why we do it. And that's why I think it's the right thing to do. And that's why I think it's something that we should continue to do. Because ultimately, in order for us to deliver our vision for Breckland, we want to make sure that we've got the certainty and the income to deliver that vision and that strategy moving forwards.
Well, everyone, you've been listening to Councillor Paul Hewitt, Executive Member for Property, Projects and Procurement, talking about how Breckland uses property investments to fund the council services upon which you rely. I've been your host, Stephen McCarthy from Breckland's communications team. Thank you so much for listening.